Hi there traders and investors, I'm glad to present to you a red hot market review prepared by analytics and forecasters FxCo portal. Here we go. Today is December 15 and we got a great opportunity to discuss the yesterday's Fed decision with Jakub Novak. The euro and the British pound declined after yesterday's statements by Fed Chairman Jerome Powell that the central bank had yet to complete its anti-inflationary campaign to raise interest rates. Borrowing costs are not expected to be slightly higher than economists predict next year. We still have some ways to go, Powell said at a news conference on Wednesday in Washington after the Federal Open Market Committee raised the key interest rate by 50 basis points. According to new projections from policymakers, rates will hit their highs at 5.1% next year and then fall to 4.1% in 2024, a higher level than previously thought. Powell claims that the size of the rate hike at the next meeting in February 2023 will depend on incoming data. More importantly, Powell spoke out against the Fed changing its policy next year, bearing in mind the fact that rates could be lowered in the second half of the 2023. It became appropriate to slow the pace of increases as we approach the level of interest rate that will be sufficiently restrictive to bring inflation down to our 2% goal, Powell said during the press conference. Against this backdrop, demand for risky assets waned and stock indices said as investors speculated that the Fed would halt rate hikes after the latest inflation data, which continued to decline for the third month in a row. Traders were also betting the borrowing cost would reach around 4.8% in May, followed by a 50 basis point cut in the second half of 2023. A couple of weeks ago, Powell signaled plans to moderate the pace of rate hikes and delivered on that promise, but one would not expect the Fed to immediately reverse its policy after several declines in the annual rate of inflation. The central bank cut the pace of rate hikes after 4 consecutive highs by 75 basis points. Yesterday, Powell made it clear that high rates would affect the economy. The Fed's growth projections for 2023 were revised up by 0.5%. The 2022 GDP estimate will also raise slightly to 0.5%. As for the unemployment rate, the central bank raised its forecast to 4.6% next year from 3.7% in November. As the euro-dollar pair, demand for the euro has weakened and now everything will depend on the US retail sales data and the European Central Bank's decision on monetary policy. To continue rising, the euro needs to break above 1.0670, which will spur the trading instrument to break through the new December high at 1.0720. Above this level, it would be easy to climb to 1.0740. In case of a decline in the trading instrument, only a drop below the support of 1.0625 may increase the pressure on the pair and push it to 1.0580, opening the way to the low of 1.0540. As for GBPUSD pair, it's moving within the sideways channel. After yesterday's upward spurt, bulls reduced their appetite because of the statements of Jerome Powell, and now everything depends on the Bank of England and its decisions. Now bulls need to break through 1.2395 to continue the uptrend. Sitting above this level, the price may return to the area of 1.2440. After that, the British pound may soar to the area of 1.2490. The pressure on the trading instrument may return if bears take control over 1.2340. It's likely to push the pound-dollar pair back to 1.2290 and 1.2240. For long positions, you can buy euro when the quote reaches 1.0679 and take profit at the price of 1.0727. growth could occur after a hawkish speech of ECB Chief Christine Lagarde. But remember that with buying the MACD line should be above zero or is starting to rise from it. Euro can also be bought at 1.0645. However, the MACD line should be in the oversold area, as only by that market will reverse to 1.0679 and 1.0727. For short positions, sell euro when the quote reaches 1.0645 and take profit at the price of 1.0595. Pressure will increase if the ECB takes a softer approach on monetary policy, but take note that when selling, the MACD line should be below zero or is starting to move down from it. Euro can also be sold at 1.0679. However, the MACD line should be in overbought area, as only by that will the market reverse to 1.0645 and 1.0595. We've got red hot trading plan on pound sterling dollar pair from Dean Leo. Looking at the 4-hour chart, overall bias for pound sterling dollar pair is bullish due to the current price being above the Ishimoku cloud, indicating a bullish market. Expecting price to head back up to possible continue, heading towards at the first resistance at 1.2666, where the previous swing high is. In an alternative scenario, price could possibly head back down to retest first support level at 1.2277, where the previous swing high is. How to trade the dollar-yen pair? Laurie Bailey reports. After the dollar-yen pair fell to support 135.34 on Tuesday, the price continues to stay at the price channel line until this morning. The Marlin oscillator is rising. The price has an opportunity to rise to 137.12. Crossing this level will make the 138.78 target available. Setting below 135.34 will open the target to 1.33.26. Taking into account the sharp price decline on Tuesday, minus 211 points, which is not typical of growing correction which started on December 5. The main scenario is the pair falling to the nearest support at 133.26. On the 4-hour chart, the price is above 135.34. The Marlin oscillator is rising in the area of downtrend. The price could rise a bit to the resistance of MACD line, blue line on graphic, at 136.30, from which a reversal with the 133.26 target is likely. That's all for today. Have a nice trading day. See you next time.